Hello and welcome to the day ahead. It is Thursday, February 12th. I'm Andrew Gagan. Well, the local market is set for a flat opening. Global stocks were on average higher to end the session overnight. However, AI disruption continues to unnerve investors, with shares in asset managers under pressure following a sell-off in the insurance and software sectors in the past week. On Wall Street, the major stock indices lost momentum as investors dialed back their expectations of more interest rate cuts after stronger than expected US payrolls data. The financial services sectors slipping while energy led the gains. The tech sector was mixed, with chip stocks rallying sharply and software stocks tumbling again, led by Microsoft, while Alphabet also fell. Brokerage firms came under selling pressure after startup Altruist announced AI-enabled tax planning features, Charles Schwab and Ameriprise Financial falling. Generac shares rallied after its fourth quarter results. Robinhood shares fell heavily after the retail broker missed fourth quarter revenue expectations, and wireless network operator T-Mobile gained following its fourth quarter results. Health insurer Humana slid after it forecast profit below estimates, and Moderna shares dropped after the US Food and Drug Administration rejected a review of the company's application for approval of its flu vaccine. And shares of Barbie maker Mattel plummeted as its full-year profit missed forecasts. Well, US jobs growth unexpectedly accelerated last month, while the unemployment rate fell to 4.3%, increasing the likelihood that the Fed will keep rates on hold. But the largest increase in payrolls in 13 months comes as revisions showed the US economy added just 181,000 jobs in 2025, compared with the almost 1.5 million jobs added in the previous year, the year before President Trump regained the White House. Meanwhile, the US budget deficit is expected to increase this year to $1.85 trillion. That's according to forecasts from the Congressional Budget Office. That has the deficit at 5.8% of GDP, with it expected to reach 6.7% in the next decade, far above US Treasury Secretary Scott Bessent's goal to shrink it to around 3% of economic output. Well, US Treasury yields climbed following the stronger than expected payrolls report as the market priced out that chance of further imminent rate cuts. The US 2-year Treasury yield jumping to 3.55%, the 10-year at 4.2%. The US dollar index initially rose then fell. The Aussie dollar is up almost 1%. Well, oil prices have gained despite a large build-up in US crude inventories, with traders focused on negotiations between Iran and the US. Brent crude futures up close to 1% at $69 a barrel. Gold has risen on steady long-term buying. Spot gold up around 1.5% to close to $5,090 an ounce. Copper's up 1%, iron ore little changed at 102 US a tonne, and Bitcoin has fallen back below 68,000 US dollars. Now, among the companies reporting results today, AMP, ASX, Breville, also IAG, Pro Medicus, Temple & Webster, Paladin, Origin, and Northern Star Resources. And ANZ has seen its cash profit for the 3 months to the end of December rise to $1.94 billion. That's up 17% from the second half FY25 quarterly average. That is your day ahead. We'll see you again tomorrow.